Canada's in a housing crisis, and everyone who talks about it talks about the same thing: supply. They say we simply don't have enough houses, and if we build enough, prices will come down and everyone will be able to afford a home. That's why Canada's federal government has committed to an astronomical 500,000 housing starts per year. But despite removing the red tape and creating special government departments and the build, build, build slogans, housing starts are set to decline in the next few years. Nowhere more so than in Ontario. That's right, the province that wanted to demolish the Greenbelt to build houses is lagging far behind the rest of the country when it comes to new housing starts. Why? Because the plan worked. Ontario built so many condos that the condo market crashed. Prices dropped significantly, affordability was restored, the principles of supply and demand prevailed. Yet, everyone seems a little bit less excited about all this than you might expect.
We've got 7 months of inventory, which is insane.
We're pretty much at a recession in the condo market.
Investors are going to be scarred for a long time. They're going to say, you know what, I'm never buying an investment condo again.
If current sales levels don't return to more historic ones, $20 billion will be taken out of the Ontario economy.
Ontario's condo situation is a perfect microcosm of the housing crisis as a whole. It shows us that simply building more homes will likely not solve affordability in the long run, and because of the way we've structured banking and housing, might actually be next to impossible. Ontario housing starts are not awful everywhere. Across the province as a whole, they're at similar levels to what they were between 2015 to 2019, with the exception of condos, which are at their lowest levels since the 2008 financial crisis. This makes sense. Ontario has built a lot of condos over the last number of years, with starts reaching a peak during the low interest rates of the pandemic. That supply is now coming to market, and like everyone predicted, the large increase in supply has brought prices down. But here's the problem with that. First of all, it's brought prices down, but not enough. Small condos are still going for upwards of $600,000. Generally, what this means is the worst possible situation for condo prices. They're too expensive for potential home buyers to be interested, and they're too cheap to be profitable for investors. Let's say I'm the government, and I want to build some houses. I'm going to incentivize the private sector to build houses. I'll cut taxes, reduce red tape, remove regulations, give kickbacks, all the things you do to get the private sector to do what you want. But there's a catch-22 here. I, the government, have incentivized the private sector to build condos. They built a bunch of condos, and now the price of condos has plummeted. Suddenly, all of those incentives I gave are not enough, because not only have interest rates gone up, not only are material prices way up, but potential profit is down. A lot of condo builds rely on investors. In fact, pre-build condo investing has been seen as basically free money in Canada for some time. You can put down 20% on a new condo, and by the time it's built a few years later, it's appreciated by 100% or more, meaning you can either rent it out or sell it at a profit. Due to increased construction costs and lower rent or sale prices on the other side, investors are taking their money elsewhere, meaning many condo projects are simply not getting off the ground. For all the talk of red tape, more permits for condo builds were issued than there were new starts last year. This is an economic problem. Experts warn that these conditions could result in further shortages in the GTA. People may buy up the cheaper condos quickly, while new builds don't start, rapidly leading to a new shortage. So this bears the question, won't this happen everywhere? If increased supply lowers prices, which lowers investment, which lowers the chance of new starts, are we doomed to an endless loop of oversupply followed by undersupply? Thankfully no, but the reason why is less encouraging. The thing is, supply may have never actually been that much of an issue. The housing crisis is not an issue of there not being enough homes. It's an issue of there not being enough homes that are affordable. Let's look at some graphs. This first graph is real home prices from 1975 until 2025. It shows home prices versus median family income. As you can see, it has exploded over the past few decades. The second is real household debt. We'll focus specifically on mortgage debt versus income. Again, more than doubled, nearly tripled. Allegedly, this is because of shortages. There aren't enough houses to go around. But this graph shows housing stock per 1,000 people in Canada over that same time period. Supply has increased. The decline near the end of the graph is largely due to the immigration surge seen over the last few years, which is now being reversed. Otherwise, supply has increased or held steady for population growth since the 1970s. So what does that mean? Quite simply, it means that supply, generally, is not meaningfully keeping prices down. It also means that building more homes, at least that 500,000 a year target the government has set, doesn't really make sense. That would be too many houses. And as we've seen from the loss of investor confidence in the condo market in the GTA, building that many homes through the private sector is likely impossible. The profit simply isn't there. So if a lack of supply isn't causing housing prices to skyrocket, what is? Another explanation is financialization. Financialization very simply refers to the increased influence of capital finance and of increasing profits being generated through financial channels rather than traditional ones, like providing a good or service. This manifests in two ways when it comes to housing: mortgage loans and investors. Private equity firms, real estate companies, REITs, asset managers, and institutional investors have all turned housing into an asset to provide maximum profit for investors. These are the types of organizations that typically fund the condo builds we've been talking about. They're not purchasing pre-construction condos to live in. They're purchasing them to charge the maximum possible rent or sell the unit at the maximum possible price. And that maximum possible price has grown significantly because of the other factor: mortgages. Once upon a time, a mortgage was a relatively simple transaction. A bank lent someone money to buy a home, the homeowner paid that loan back over 20 to 30 years with interest, using the house as collateral. This was a profitable deal for the bank, but not especially so. However, in the 80s, banks moved towards securitizing mortgages. Essentially, instead of loaning money and charging interest, banks took those home loans and traded them as securities, generating profit for global investors. This created a lot more money, which is great, at least for some people, but it also incentivized banks to lend more to more people. All of that new money in the real estate market led to increased consumer debt and drove up housing prices. The bank's risky habits around these investments also led to the 2008 financial crisis. Especially in America, institutional investors bought up huge portfolios of foreclosed homes after the crisis, essentially giving the modern single-family rental industry its start. In short, housing has become incredibly profitable, either by owning it yourself and holding as an asset, or by buying and selling mortgage debt. Housing has become a bubble, like gold or crypto, based on what people are willing to pay for it, and investor confidence that it will continue to be profitable. The difference is that housing is an essential commodity, meaning that bursting that bubble is much harder than it is for something like gold, as people will pay whatever they have to in order to get it. This is why people like Donald Trump say things like this.
Existing housing, people that own their homes, we're going to keep them wealthy. We're going to keep those prices up. We're not going to destroy the value of their homes so that somebody that didn't work very hard can buy a home. We're going to make it easier to buy. We're going to get interest rates down. But I want to protect the people that for the first time in their lives feel good about themselves. They feel like that they're wealthy people. And I want them to understand it. There's so much talk about, we're going to drive housing prices down. I don't want to drive housing prices down. I want to drive housing prices up for people that own their homes.
So here's the takeaway. Canada's plan is not going to work because it's the wrong plan. Financial institutions own between 20 to 30% of the country's purpose-built rental stock, which increased significantly during the pandemic. The development of build-to-rent properties has increased in recent years, while affordable housing numbers have fallen. Even if building more rental units would decrease prices in the short term, financial institutions own these units to generate maximum profit, which, in case I need to spell it out, is the opposite of affordability. And even if an increase in supply lowers prices, as we've seen with condos in the GTA, it will more likely lead to a significant decline in housing starts, as investors lose confidence that new homes will provide a return. If housing becomes too affordable, it could lead to an actual shortage of houses, which would only make things worse. Canada is relying on a great irony in capitalism, expecting to restore affordability by relying on private companies that want to maximize profit. Continuing to build enough homes to match population growth is important, but equally or more important is addressing institutional investors and the financial circumstances that treat housing as an asset to generate return rather than a place for people to live. But that would mean standing up to banks and huge corporations and landlords, like a significant portion of politicians, and limiting their ability to make more money. It's a whole lot easier to just blame it on a lack of building. But if even Doug bulldozed the Greenbelt Ford can't get shovels in the ground in Ontario, I think the issue might be a little bit more complicated. That's the video. Thanks so much for watching. If you like content like this, please like, comment, and subscribe. Special thank you as always to everyone over at Patreon. If you want to support independent Canadian content like this, you can do that over at Patreon. The link is in the description. Thanks so much.